Hello and welcome back to FinMe, your daily deep dive into the Indian stock market. It's Tuesday, June 3rd, 2025, and Dalal Street has just been through another roller coaster session. The bears seem to be tightening their grip for the third straight day. We saw the Sensex and Nifty take a tumble, but was it all gloom and doom, or were there some hidden pockets of opportunity? We've got all the numbers, the news, and the analysis you need. Let's break it all down. Market overview, the big picture. Now for the headline numbers. The BSE Sensex opened at 81,492.50, saw an intraday low of 80,575.09, and finally closed at 80,737.51. That's down a significant 636 points, or 0.78%. The Nifty 50 wasn't spared either. It started its day at 24,786.30, dipped to an intraday low of 24,502.15, and ultimately settled at 24,542.50, shedding 174 points, which is a fall of 0.70%. From a technical standpoint, this is quite interesting. Analysts are pointing out that the Nifty formed what's called a bearish engulfing candle on the charts today. This pattern often suggests that a downtrend might continue. It closed near its crucial support level of 24,500. Bank Nifty also felt the heat, closing at 55,583.85. This reflected the general decline of about 0.5% to 1% that we saw across various banking sub-indices today. Broader market action coming to mid-caps and small-caps. The BSE Midcap Index also succumbed to the pressure, declining by 0.52%. The BSE Smallcap Index, however, showed a bit more resilience. It ended only marginally lower by 0.07%. This slight outperformance by small caps, or rather their less severe underperformance compared to their larger counterparts, is an interesting point, finding some temporary support today while large caps caught up with the selling pressure. The day's movers and shakers. Alright, let's zoom into the individual stock stories. Who were the heroes and who were the ones feeling the heat today? We'll show you the top 5 NSE gainers and losers on your screen now. First up, the gainers. Leading the pack was Grasim Industries, up 1.28%. This positive move could well be a follow-through from their strong Q4 results announced in late May. Shriram Finance also managed a respectable 1% gain. Now, for the stocks that faced selling pressure. On the losing side, Adani Ports and Adani Enterprises were among the top Nifty losers, down 2.32% and 1.89% respectively. Adani Group stocks in general faced broad-based declines today. This followed reports suggesting alleged links to Iranian LPG shipments, a claim the company has strongly denied. Nevertheless, this news seems to have spooked some investors. News that moved the needle. Global and domestic. The Trump administration has reportedly issued an ultimatum to several countries, including India, to finalize trade deals by this Wednesday. This comes just 5 weeks before reciprocal tariffs are set to kick in. The administration is pushing for what it calls best offers on crucial areas like tariffs, import quotas, and digital commerce. The renewed threat of increased tariffs, especially the talk of the US potentially doubling tariffs on steel and aluminum to 50%, is a major concern for global economic stability. Adding to this cautious global picture, the OECD released its latest economic outlook. Globally, they've had to cut growth forecasts for both 2025 and 2026 down to 2.9%, citing these escalating trade tensions as a primary reason. For the USA, the projection is a significant slowdown, with growth expected to fall from 2.8% in 2024 to just 1.6% in 2025. For India, the OECD has trimmed its FY26 GDP growth forecast slightly by 10 basis points to 6.3%, and for fiscal year 27 by 20 basis points to 6.4%. They see inflation for India at around 4.1% in FY26. So, while it's a slight trim, India is still positioned as a relative bright spot in a slowing global economy. Shifting to domestic news, the buzz around potential RBI rate cuts is getting louder and louder. Morgan Stanley, for instance, is maintaining its overweight stance on India, even though they've revised their December 2025 Sensex target down to 82,000. Importantly, they're expecting two RBI rate cuts this year. They believe India's relatively low beta, meaning it's less volatile compared to global markets, is helping it outperform during the current global sell off. Adding considerable fuel to this fire, an SBI research report has suggested that the RBI might even go for a jumbo rate cut of 50 basis points in its upcoming monetary policy meeting. Deliberations for this policy began today, with the final decision expected on June 6th. Stocks in the limelight. Several specific stocks were buzzing today due to company specific news. Let's take a quick look. First, Yes Bank. The stock saw heavy trading volume today. About 3% of its equity changed hands in a block deal, reportedly at a discount. After rallying 8% yesterday, the stock fell sharply by 6 to 7% today, closing around the 21 rupee mark. Market buzz is strong that a major private equity holder, very likely Carlyle, which owns around 6.8% of Yes Bank, might have sold about half its stake. This activity comes as State Bank of India also has plans to offload some of its stake to Japan's SMBC, so there's a lot of shareholding churn happening in Yes Bank right now. Then there was Ola Electric. This counter also saw over 3% of its equity traded, again at a discount. The probable sellers here are believed to be automotive giants Hyundai or Kia. Hyundai officially owns about 2.5%, and Kia might hold additional stakes. The stock shed over 5% today. Aptus Value Housing Finance shares tumbled a significant 9 to 10%. This was after a massive block deal where shares worth approximately 2063 crore rupees changed hands, user query. Reports indicate that a promoter entity, Westridge Investments, was looking to offload a substantial stake. These large block deals, especially by private equity firms and often at a discount, might suggest that these institutional investors see current valuations as a favorable exit point. It could indicate their view of limited near-term upside for these specific stocks, or it might be part of a broader strategy to cash out profits. Shares of ICC. Prudential Life fell around 3 to 4% today. The main trigger for this seems to be a lower than expected dividend announcement. The company declared a dividend of just 85 paise per share, with the record date set for June 12th. This translates to a very low dividend yield of about 0.13%. This reaction highlights how sensitive investors can be to dividend announcements, especially in a nervous market where a good dividend can be seen as a safety cushion. But it wasn't all negative. On a positive note, Wari Renewable Technologies shares initially surged about 4%, though they closed up around 1.58%. This was on the back of securing a 346 crore rupee solar EPC order from CESC for a 300 megawatt project. We also had a new listing today. Prostorm Infosystems, an integrated power solution company, made a decent debut on the exchanges. Its shares listed on the NSE at 120 rupees, which is a premium of 14.28% over its issue price of 105 rupees. And finally, Larsen and Torbro L and T, the company's water and effluent treatment business has bagged significant orders from Rajasthan's Public Health Engineering Department. These are for rural water supply and fluorosis mitigation projects, and the order value is estimated to be in the range of 1,000 crore to 2,500 crore rupees. The positive news for Wari and L&T shows that strong business fundamentals and clear visibility of future earnings are still being rewarded by the market even on a weekday. What to watch tomorrow on June 4th? A few companies are slated to announce their audited results. These include Hardwin India, Sampre Nutritions, Royal Cushion Vinyl Products, Akanksha Power Infrastructure, Arcotech, and Euro-Asia Exports. Importantly, tomorrow is the record date for dividends for a few major companies. Tata Motors has a 6 rupee per share dividend, Inox India a 2 rupee dividend, and IT giant TCS has a 30 rupee per share dividend. When stocks go ex-dividend, their prices typically adjust downwards by roughly the dividend amount. If multiple high-weightage stocks have such adjustments on the same day, it could have a slight statistical drag on the main indices, independent of other market movements. As always, keep a close watch on US futures and how Asian markets open in the morning. European markets were trading flat to negative today, and US futures were in the red when we last checked, so global sentiment will continue to be a key driver. The RBI's Monetary Policy Committee meeting continues, with the final decision on interest rates and policy stance due on June 6th. While the decision isn't tomorrow, the market will be extremely sensitive to any statements, hints, or even leaks from the ongoing deliberations. So, to sum up today, June 3rd, it was a third consecutive day of declines for the Indian markets. This was driven by a mix of global trade jitters, continued FII selling, and those persistent valuation concerns. The key indices, Sensex and Nifty, were both down around 0.7% to 0.8%. However, it wasn't a complete washout. The big story continues to be the interplay between these challenging global headwinds and domestic policy expectations, especially those very significant hopes for RBI rate cuts. If you found this market breakdown helpful and want to stay ahead of the game, do me a solid, hit that like button, share this video with your fellow traders, and most importantly, subscribe to FinME and ring that notification bell so you never miss our daily market insights. We'll be back tomorrow to decode another day of stock market updates.